Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin holds near $67,000 while Ethereum trades just below $2,000, and XRP sits at around $1.47. Despite consolidation, significant institutional and regulatory developments are reshaping the crypto landscape. Abu Dhabi sovereign funds increased their Bitcoin exposure substantially in the fourth quarter of 2025, with combined holdings through BlackRock's iShares Bitcoin Trust exceeding $1 billion by year-end. Mubadala Investment Company and Al Warda Investments now hold nearly 21 million IBIT shares collectively, accumulated during a quarter when Bitcoin declined 23%. Harvard University disclosed a notable portfolio rotation. The university trimmed its Bitcoin position by selling roughly 1.46 million IBIT shares during Q4, reducing that stake to approximately $265 million. Simultaneously, Harvard opened a new 3.87 million share position in BlackRock's Ethereum Trust worth about $87 million, reflecting recognition of Ethereum's smart contract infrastructure alongside Bitcoin's store of value function. On the regulatory front, CFTC Chairman Michael Selig declared the agency will defend its jurisdiction over prediction markets in court. In a Wall Street Journal op-ed published February 17th, Selig stated, "We will see you in court," to states challenging CFTC authority. Several states, including Nevada, Massachusetts, and New York, have pursued legal action against platforms like Polymarket and Kalshi, claiming these contracts violate state gambling laws. California is implementing its digital financial assets law with a July 1st deadline. Crypto firms must obtain a state license, submit an application, or qualify for an exemption to continue serving California residents. Stripe's stablecoin infrastructure firm Bridge received conditional approval from the Office of the Comptroller of the Currency for a national trust bank charter. This would allow Bridge to issue stablecoins, custody digital assets, and manage reserves under direct federal oversight. Privacy technology is becoming an urgent economic issue for Ethereum. Bots and MEV extractors consume over 50% of gas fees on major Layer 2s while paying less than 10% of actual fees, extracting nearly $24 million in MEV profits over a recent 30-day period. Solutions like MEV Share redirect 90% of extracted MEV value back to users. Physical security threats against crypto holders are escalating. Hardware wallet owners are being targeted by sophisticated phishing scams using forged postal mail impersonating Ledger and Trezor. Meanwhile, physical wrench attacks surged 75% globally in 2025, with 72 verified incidents and over $40 million in confirmed losses. France has become the epicenter, accounting for 19 verified cases. Gemini stock plunged over 14% following the departure of 3 top executives, including the CFO, Chief Legal Officer, and COO. The company disclosed projected 2025 net losses between $587 and $602 million. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.